Hey there, pro traders, and welcome to our Monday market review, the first one of September, just before we go into the last quarter of the trading year in 2022. And I hope you all had a good break during the holiday season, even though it was just the Northern Hemisphere holiday season. Certainly, I managed to get some good downtime, but also, just as a quick FYI, I have pretty much finished the next installment of the Trade Manager, the one which takes advantage of the alpha approach to trading our impulse strategies. So those who are interested in getting the upgrade or getting involved with using the trade manager, which really takes so much of the work away from you and make sure that you are able to trade 100% consistently and get all of those trades, then look out for announcement. We'll probably be doing the launch session and training a little bit later this week. All right, so that being said, let's jump into our pairs. First of all, as always, looking at the euro, we've got certainly here a nice intact bearish trend. It's showing, it was showing a little bit of a pause for thought here on the weekly time frame over the last couple of weeks as it came down to the prior support level, which hasn't yet been broken. Looking for that to happen this week. Last week was simply an inside bar on the weekly time frame, so not much happening on the euro really in the last couple of weeks, which can be seen by this breakdown in cyclicity here on the daily time frame and sitting very solidly on that support level. So nothing for us to do there, unlike on the cable, where you can see we are well outside of the HTC channel here on the weekly time frame, despite some preceding weakness that we know about a month or so ago, where we were inside the channel and we had the overlap of the retracement waves. We've certainly had a strong bearish breakout with 3 weeks of consecutive impulse candles here on the weekly time frame, and a very strong intact trend on the daily time frame, which has been eminently tradable. So I know that some of you folks already started trading again the last couple of weeks, and this has certainly been one of the pairs that's been top of the radar. The GBP weakness certainly has been something worth taking account of, especially in conjunction with the more recent US dollar strength. All right, so you will see a couple of the other GBP pairs also showing some good movement, but here on the cable, definitely one for us to keep an eye on still going into the new week. On the yen, likewise, we've still got our strong trend here on the weekly time frame. You'll notice that just over a month ago, we had the retracement back to the preceding was resistance, now support level, respected it nicely over a period of, well, just almost 4 weeks after breaking up into a bullish direction. And again, we've had 3 bullish impulse candles here on the weekly time frame. And looking pretty strong on daily. We've had to wait for the breakout from the HTC channel, but it did that last week after flirting with that resistance level for a few days. You could see on Thursday it popped straight out. Remember, last week, of course, was also non-farms, so we were taking it easy towards the end of the week, and that's another reason why we're starting again this week. So it was good to have just sat on your hands for Friday. You can see we just had a high test candle there, but it looks like the market wants to resume. So still very much an impulse wave here on the daily time frame trend. So moving on, in fact, to now dollar Swiss on the weekly time frame. Yeah, you can see that here again, that dollar strength showing itself for the last few weeks. But we are very much inside of the HTC channel, so nothing really of interest there. And likewise here on daily, we are still inside of the channel. We haven't got a class 1 pattern here at all either. So that being said, last week was a pretty strong week for the dollar, but it was across multiple instruments. So this wasn't really the favored pair, if you like. USD CAD coming up to this resistance level on the weekly time frame, also sitting inside of that HTC channel. And here again, you can see that resistance level holding the market back, but we do have a potential breakout coming. This is a potential class 1W pattern, which could lead to another break to the upside. And certainly, if the dollar strength continues, then that would be expected. Aussie, yeah, here's the dollar strength again, not so visible as it was against the likes of the cable and the pound. But you can see that last week, technically, we had a break below the HTC channel, We do have point B in this pattern in the way, so just bear that in mind. So there's another support level that needs to be broken here, and the preceding pattern here is one of weakness, but that doesn't mean that it will continue. So the fact that we've got this bearish breakout is certainly giving us reason to keep an eye on this instrument. You can see here on the daily time frame how that breakout of the HDC channel was followed on Friday with non-farm payrolls of a retest of what was support, now resistance, and looks like it wants to roll over and continue in a bearish direction. This being Monday morning still, it's not a surprise that the market is still gathering itself, but let's see what happens through the course of the next few days on this one. The last of our majors and minors is the Kiwi, of course. Similar picture to the Aussie, outside that HTC channel just for a bit longer. All of these candles, the last 3 weeks being impulse candles, but that's about all that can be said for them. And again, we are sitting on that preceding support level here on weekly. Not quite as pretty a picture as we've just seen now on the Aussie, with Friday's close inside the HTC. But that doesn't mean that a very similar picture will present itself if that dollar strength does continue. All right, so that's that for our USD pairs. Let's look at the yen crosses. Not that much really happening on the yen crosses by comparison. So that dollar strength really having made things more interesting recently. But here on the euro yen weekly time frame, very much inside of the channel last week, giving us an impulse candle, which is a bit of a well, it's an impulse wave on daily, obviously. So potential class 1W pattern, but very much inside of the HTC channel. The GBP yen has been flat for a long time. We spoke about this before our break, and you can see looking back further to the beginning of the year when we had such a good trading period on the yen pairs, you can see that there's absolutely nothing happening at the moment. And that's both on the daily and the weekly time frame. Here on daily, well, since late July, it's really just been stuck in quite a narrow channel. So not interested in that at all. Swiss yen testing this resistance level here again. So Swiss franc strength has been a consistent theme for quite some time, obviously going all the way back to the beginning of the year. So potentially looking for a breakout here as well. But it has been flat now for the last 3 weeks. And we can see how this resistance level continues to be respected. However, it's almost dying to break out. So maybe we're going to get that in the next day or two, including maybe today. Let's wait and see what happens. But we do need to wait and see on this one and give the market an opportunity to prove itself one way or the other. Right, CAD yen, another one where we're seeing the resistance level being touched here at the top of our HTC channel. There's nothing intact at the moment, but it is interesting that this resistance level is being tested. Let's wait and see what happens here on weekly time frame. But on daily, you can see we have had our HTC channel move along somewhat, and therefore that implies that we are now outside of it. It's managed to just respect the support level, showing continued strength. So through the course of Thursday and Friday last week, we've been into another potential phase one wave of this bullish breakout on the daily time frame. That being said, we do have this resistance level staring us in the face. So beware of that. But remember, if you're trading a convex strategy, as we do, then it doesn't really matter because your losses are small, but you stand to gain a huge amount if we do get that breakout. Aussie yen, not as impressive. It's a little bit more similar to the GBP yen, I'm sure you'd agree. So it's not even really getting up to that. Well, the resistance level here is maybe a little bit lower than what the HTC channel is showing. But it is stuck up against that as well. And as I say, not as impressive. It's really failed to break out even on Friday, tested and fell back again. But another one to keep our eye on. And the last of the yen crosses, Kiwi yen also, being stuck in quite a narrow channel here on the weekly time frame, going back quite a long time now, all the way to May. And that's what it looks like on daily. Definitely very unimpressive, certainly for convex strategies. This is not a pair that we'd be interested in touching at the moment. Right, so that's the yen crosses. Let's look at euro crosses, euro GBP. Well, certainly over the last month, we've seen this bullish wave on the weekly time frame. Look, the week before last was an inside bar, but made up for it last week. So again, that really more than anything else is showing us that GBP weakness here against the euro. So bullish breakouts on the HTC channel here on the daily time frame early last week. Showed a bit of retracement activity, but choppy as well. We had a bearish candle followed by an engulfing candle today being Monday, also pulling back slightly. Let's wait and see what happens, but it's definitely showing promise. If this GBP weakness continues, that's definitely one to look at, but there are others which we'll get to in a minute with our GBP crosses. Let's look first of all at the rest of the Euro crosses. Here's Euro Swiss. So I mentioned just now that the Swiss franc has been consistently strong for a while, visible here as well against the euro. And technically, we're still in the strong trend. Last week's bullish impulse candle, quite aggressive, but it respected what was support, but is now resistance, the bottom of the HTC channel. So interesting to see what happens here. Definitely potential for a rollover. But again, the Swiss franc, much as it has been relatively strong, is not really the story of the last few weeks. But let's keep an eye on these anyway. EuroCAD, really nothing to write home about here at all on the weekly time frame, continuing to respect that support level. No cyclicity intact at all. We had that false breakout a little while ago. You can see I haven't really even bothered updating the daily time frame analysis. Not something I'm really interested in. Stuck in pretty a flat range over here. The HTC channel obviously being more represented by a resistance level over there. So quite a narrow range, really not one of the pairs that we're interested in trading at the moment either. Euro Aussie weekly time frame, again, we can see how the HTC channel has narrowed somewhat, which is its job, of course. And that shows that according to this support level, we did in fact have a breakout and has been messy, despite the fact that we've got lower highs and lower lows on our candles, giving us, the fact that this bearish breakout is still intact. It's extremely weak, and last week's close back inside the HTC channel and the preceding retracement wave is not boding well for us. So not interested in that either. The last of our Euro crosses with the Kiwi, definitely not interesting either on the weekly or perhaps on the daily time frame. But again, the market falling back on Friday, closing back inside of our HTC channel, and not really showing any momentum to the upside there at all. So as you can see, our Euro crosses aren't really something that we're looking at the moment. So let's move on to more interesting instruments. Here we've got GBP Swiss. So again, we've got some Swiss franc strength against the weakness of the pound. That's very visible over here. So here we've got a strong bearish trend. The last few weeks have been a little bit slow, and that's not that untypical for August. We're hoping that we're going to get a bit of a bearish resumption here. And in fact, Friday closed just outside of the HTC channel. We had a gap, as you've seen on some of these pairs already. Over the weekend, it's filled that gap, but looks determined to stay outside of the channel. So this is, again, looking pretty bearish, especially for a Monday morning. So I wouldn't be surprised if this continues in a bearish direction, which would mean that we've got continued both strength on the Swiss franc and weakness on the pound. So that's one to keep an eye on. GBP CAD, likewise, you can see that a definite show of strength here of the Canadian dollar against the pound weakness. And we've had 4 weeks in a row, bearish weeks in a row, which shows itself on the daily time frame to be like that. So strong bearish trend well outside of the HTC channel. Nice class 1 M pattern at the moment. And if it wasn't for non-farm payrolls, you would have probably been looking to trade this all the way through Friday. But today and this week are a new week and a new day. So keep an eye on that one as well. You can see there that gap as well on the open this morning. Right, GBP Aussie, again, showing pound weakness. Not as impressive. Yes, we are outside the HTC channel. We've got a couple of bearish candles here, including last week being a bearish impulse candle. So also potentially tradable. Here you can see how we got that outside close after a week of consolidation. Last week was very flat, as you've noticed across many of the pairs in the lead up to non-farm payroll. So again, looking for something of a resumption here. This morning so far, pretty quiet. GBP NZD inside the channel, not really of interest to us. We've got other things that we can look at. But of course, that bearish movement over there showing that it is still looking to come back down to the support level, and maybe we'll get a bearish breakout through the course of this week. Right, that's it for those. Let's look at the other crosses. CAD Swiss, not going to spend any time on this. We spoke about some Swiss franc strength over here, but you can see that over the recent, in fact, last week and the week before, it was more Canadian dollar strength than anything else. But Swiss franc strength creeping in through last week and now into this morning as well. That's just academic. We're really not interested in trading those at all. Aussie Swiss likewise absolutely flat and useless to us. Nothing doing there at all. Narrow range. If you're a range trader or reversion to the mean type trader, then there are a couple of pairs like that one, which are probably a dream come true because it doesn't happen that often, not that neatly anyway. Right, Aussie CAD likewise. No real interest to us, despite the fact that we've got a marginally intact trend here, respecting the support level as well on the daily time frame of that HTC channel. And Aussie Kiwi, right? So in this one, you can see how we've had a bullish breakout 2 weeks ago with that close outside of the HTC channel, but then last week it pulled back and closed back inside of the HTC channel, which is not really what we're looking for when it comes to consistent respecting of support in a bullish trend. And that's visible like that on the daily time frame, where last week we had the market coming straight back down, also into the HTC channel. On the daily time frame, it is still a potential class 1W pattern, but really then we've still got this quite strong resistance level, or significant resistance level, I should call it, in the way. Right, our last two pairs, Kiwi Swiss on the weekly time frame and daily, waste of time, and Kiwi CAD, weekly and daily, waste of time. Even though this is marginally outside of this HTC channel, you'll see there's multiple support levels all the way down here. This is a very messy market at the moment. There's much better things for us to look at. Right, let's move into gold. I know many of you have been trading gold. We've had some success, obviously trading in a bearish direction. Analysis is good here and has been for the last few weeks to go short on this, using daily, well, certainly for daily impulse, but even on the lower time frames. So daily impulse, I know there was a nice winner that hit take profit on this last week. If you were using standard targeting, if you are using advanced targeting, then you are still in the trade on the daily time frame. And of course, there's been plenty of opportunity to scoop some good trades on intraday time frames. So keep an eye out for that through the course of this week as well. Right, so as expected, the stock markets, the US stock markets have rolled over again, so that that recovery was short-lived. Well, not that short-lived. It lasted for a good 5-6 weeks. But nevertheless, the market for the last couple of weeks has shown itself to be pretty bearish. And that's what it looks like on the daily time frame. So although our HTC channels are pretty wide here, there are some folks I know who've jumped in using more aggressive analytical techniques to trade these in a bearish direction. But the conservative approach would be to just wait it out. Obviously, that wouldn't necessarily be our favorite pair to trade. S&P 500 may be a little bit more interesting. There's weekly and daily, where we did get a bearish breakout of the HTC channel. So last week, there were some bearish opportunities here for intraday trading more than anything else. And here we have the NASDAQ, likewise, solid bearish activity through the course of last week. And again, I think a few people jumped on that one. So those are the only real markets we're interested in when it comes to equities. Oil still going kind of sideways, really hovering around that support level just below the $100 per barrel mark. So not really trading this at the moment either. Looking for some directional momentum there. And you can see on the daily time frame as well, nothing really happening either. Which leaves us with our last one, Bitcoin, which is still hovering around the $20,000 mark, not showing much appetite to break, excuse me, either way, but there's certainly potential for it to go either in a bullish or a bearish direction. I have got a suspicion that we might start seeing a break to the upside as we see folks looking for various types of safe haven securities. However, that's not meant to be a prediction because, as you know, I always wait for the market to prove itself. Right, folks, so that's pretty much it from me. If you're enjoying this material, as always, please make sure that you subscribe to our channel on YouTube and hit that notifications bell. And also, we make sure that we post these and other training on both our page and our group in Facebook. So if you're not a member of the group, and if you haven't yet followed and liked the page, please make sure that you do that. and you will get ongoing updates to the latest and best professional trading advice and material that you can get. So make sure that you're part of that. And just to reiterate that we are going to be launching the new trade manager, which will help you to apply the alpha approach consistently across all the markets that we trade, and help you to hit those goals with your funded accounts. Make sure that you move through those levels and maximize your earnings as quickly as possible. All right, folks, that's it from me. I hope you have a fantastic week's trading and look out for those announcements. Chat to you soon. Bye for now.